Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar decline extends into Thursday's session. However, the bulls still maintain and guard the area around the 60-day moving average, which is seen around 68.55. From there, the market has displayed a relatively modest bounce. Nevertheless, the base underneath from the 60-day moving average still holds around 68.35. I feel that the market may take another challenge to this downside due to the dollar index, which measures the greenback strength against a basket of six major currencies, has rebounded to a 6-week high around 103.55 after a stronger US retail sales and inflation data. Overnight, sales at US retailers, which include spending on food and fuel, increased by 3% month by month in January and over December's level of negative 1.1% and surpassed the forecasts of 1.9% increase after two straight monthly declines. Since the overnight sell-off, the market is respectively holding around that 60-day moving average. Still, earlier today, the market was a little bit on shaky ground after the Australian employment change offered a negative surprise, that is, of minus 11.5 thousand jobs versus an expected plus 19,800 forecast. And with that, the market was also, prior to the data in December, was at negative 20,000, while the unemployment rate rose to 3.7% versus a 3.5% expected and prior. Meanwhile, the RBA Governor, Phil Lowe, reiterated on Wednesday that the interest rates had not peaked, adding that he was unsure how high they had to go as the central bank tackles high inflation. The RBA Lowe is expected to speak again on Friday, so no doubt the markets will be reassessing what he has to say, whether it's more to the dovish or more to the hawkish side. Any advancement on the day expects to see resistance around 69.45 and the firm cap, which we can still expect to hold, that is around 69.95. So as I mentioned, the dollar index rebounded to a 6-week high that has weighed on the euro, not as much. Nevertheless, it still looks towards that key level of 106.20, and from there may see some support coming back into play. However, a break of 106.20 would give an extension down towards the region of 105, and that in terms would expect the dollar index rallying on to 104 to about 104.5. But I do like the way this RSI is shaping up. A little bit of divergence there into the bullish case. That may be the saviour of the market for the euro, and it bounces off that 106.20. The top side still holds around 107.80.90. The dollar yen has taken out the top side level as the bulls cheer from the break of 132.80.90, and also looking now towards the region of 134 to 136 as a potential target. Any pullback should find support around 133.65 as minor, and the support beneath at 132.85. Overall, though, I do expect to see the upside challenge be continued as the ADX does support a bullish case. But it would seem that the pound has plummeted further since the break of 121.5 and now looks towards 119.5 as initial move after the headlines that the UK CPI fell to 10.1% in January compared with the rate of 10.5 increase in December, and along with that a peak around 11.1 in October. Still, there is undoubtedly many still expecting to see further rate hikes from the Bank of England, as they will still see around that 10.1 in January inflationary high not accepted, and therefore the market may actually take a little bit of a choppy or into rough seas as we head towards this 119.5, as beneath looks towards the region of 118. Technicals have broken down, so the bears and most probably will weigh on the pound. Finishing up with gold and oil, well, as we can see, the market has nearly claimed its target of 1,800 in 2026, having plummeted quite significantly overnight. Along with that, the technicals are somewhat heavy, but I would feel that getting closer towards this target would leave me neutral around 1,820, as I feel that it would be time to reassess or reevaluate where the next move will be. But the ADX is bearish and strengthening to the negative case or the bear trend, and therefore should continue to see the bears sink in their claws. Wrapping up with oil, we've seen two attempts at this downside level, which is around 76.90 and respected. But we're not out of the woods yet, but nevertheless, the RSI has bounced off the midway point, saving further bearish price action into today. However, any movement up towards 80.5 may struggle, so I'm not ruling out another test to the downside, which could actually see the level of 75, 60, 80 challenged before the initial move back to that top side range of $82 a barrel. Well, that wraps it for today. Thank you very much for joining me, and as always, look out for the intraday report, and I hope you enjoy the rest of the day.